It's my pleasure now to introduce our next speaker with the Beck Group. She's going to talk about construction. I didn't mention that. I don't think construction costs are going to be going down. In fact, you may see a little increase next year, in my opinion. But we'll see what Jennifer Siehling has to say about that. So, Jennifer, come on up.
All right. Well, that was a good start. Good morning, everyone. I am Jennifer Siehling. I'm with the Beck Group. I'll go ahead and click through here. So I am the leader of pre-construction for our Fort Worth region. Beck is both an architecture and a construction firm, so we're able to watch the market really at every step in the process. And we've been in Fort Worth for over 70 years. We've got clients in the Cultural District, downtown, the River District, and of course, TCU. So let's get started. Really, last year we predicted that skilled labor was going to be a challenge, filling open roles. We thought material pricing would continue to increase, but that was really in a landscape where construction activities were continuing to go up and up in the DFW region. So, were we correct? Yeah, we were correct. Those predictions were accurate last year. Unfortunately, you may also recognize the person on the screen as your project manager or your cost estimator last year. And so really, in addition to navigating all of that price escalation, there were backlogs, exponential lead times, material shortages, and supply chain challenges, and really, that's enough to make any sane person go a bit crazy. So let's look at 2023. We are predicting a continued shortage of skilled labor. We don't see that changing anytime soon. We are predicting some stabilization in material pricing. We do still expect it to increase, but maybe not at quite the rate that it's been going. That is in a slightly different market, though. We're expecting construction activities to kind of slow its rate of growth over the next year. So let's dive right into the details. The American Institute of Architects, so the AIA, measures the Architectural Billings Index. And this is really derived from their monthly Work on the Board survey. It is a 9 to 12 month leading indicator for non-residential construction activity. So a score of 50 would represent no change. Nationwide, we have dropped below 50 at 46, which is down from last year. And this is really the first decline in billings in nearly 2 years. But looking specifically at our region, we are down 3 points from last year, but we do remain just above 50. So the good news is that is better than every area in the country. Top concerns, and these will be no surprise for architecture firms, were material costs and material availability. They're the same as they were last year, the same concerns that everyone in the industry has. I do want to point out that that is going to vary across sectors, and that's just a little teaser for our speakers that are coming up that are really going to go into the market-specific data. All right, Engineering News Record also does a Construction Industry Confidence Index survey. This is really a survey that measures executive sentiment about the market. They look both at the short term and about 12 to 18 months out. So a score below 50 here would indicate a shrinking market. So according to the recent survey, we're at a 33. That is down 11 points from Q2, Q3 of last year, and down 27 points from this time in 21. Industry executives are really expecting that the first half of 2023 will be the most challenging. Now, that does understandably cause concern. However, we're not expecting this adjustment to be long-term. ENR also surveys designers, general contractors, subcontractors, and they look at, present, 3 to 6 months out and further out. And you can see that, all three groups are really expecting the next 6 months to be either stable or declining, but that's not a long-term trend, and the trajectory is still very positive. And that's also supported by FMI data. So they plot total construction spending across the U.S., and that's really represented by the size of the bubbles on the chart. And you can see that really in this Texas market, we've got a lot of really strong areas. And then the color on the chart is representing their forecast for growth through 2026, and so that's by the color. And you can see that DFW is largest bubble and very green, so all good things. So while we're seeing architectural billings decrease, the confidence index drop, we're not expecting either of those to be a long-term trend, which is good news. So there are a lot of projects still moving forward in 2023, so I wanted to spend a little time talking about really the three major parts of a bid price, which would be the labor market, material cost, and the construction schedule. And really, right now, labor and material pricing are very intertwined, so I'm going to start there. The labor market continued to be a challenge last year. I mean, I don't need to tell anyone in this room that. I bet if I surveyed anyone, if you had challenge filling positions last year with the right fit at every level of your company, you'd probably agree that it's been a big challenge. The U.S. Bureau of Labor Statistics, this is for our region specifically, labor rates have risen over 5% in the last year. And the AGC has reported that hourly craft worker pay has risen over 6%. So that's really about double what we would expect on a yearly basis. So definitely still at a high level. And we expect it to continue to be a challenge. All right, moving into material pricing. I think that this is an accurate sentiment for how each of us likely feels when we go to the grocery store. Touched on that in the last speaker as well. And really, if we feel this way about our everyday purchases, if we're shocked and surprised, it's really no surprise that owners and developers feel the same way about their construction project costs going up as well. And that's really supported by the comparison of the producer price index via the consumer price index. You can see that they have really been divergent since about August of 2020. And so what that really means is the sticker shock that each of us feel when we go and buy anything, it's just been exponentially worse in the construction industry. We are happy to see that the two are starting to come back towards each other so that hopefully our kind of internal, what we think things should cost, will start to stabilize with the market overall. But let's look at materials in a little bit more detail. The material price index, the subcontractor price indexes, it is a more varied, really varied across the market. We are seeing some stabilization and a few small decreases here and there from a month-to-month basis, which you can see on the far right there. However, if you look over the past year, you can see diesel fuel is up 60%, concrete products are up 14%. So while we may see some stabilization, it does not mean that everything is back down to those earlier levels. Still pretty high. That's true for our subcontractor price indexes as well. You can see roofing contractors, while stable in the last month, are up 20% over the past year. So many have being in pre-construction, I look at a lot of projects and talk to a lot of different people. And really, a lot of people have kind of anecdotally said to me, hey, don't you think that prices are going to come down in Q1 of next year? And, I wish I had that crystal ball, but what I can say is this chart by the AGC is kind of a good way to think about it. So the AGC looks at the change in cost versus the change in bid price. And so anything that's in blue above the line is really saying that the change in cost was exceeding the change in bids. And so really between 2020 and 2022, what we saw was that as material costs were rising exponentially, the bid prices were not rising as quickly as the costs were, which really means that some of those increases were being absorbed into the bid prices, even though it may not have felt like it. That trend did reverse about the middle of last year. So now the change in the bid prices is exceeding the change in the costs. So it is possible that a tighter market is really going to reverse the trend again. We did see that back in 2012. But I think that we should expect that the change in bid prices will continue to exceed the change in costs throughout 2023. With the volatility that we saw last year, forecasting inflation, escalation, all of that for specific projects, that's really been a huge focus for us, really over the past 2 years. It can have a huge impact on a project's overall cost, overall budget, reserving the right amount of money to ensure you get the most program for the budget that we have. So we've been doing that over the past few years. We're looking at multiple sources, and really we're creating geographical market projections for that inflation. This one is an example of one for Fort Worth, and it's a measure of non-residential building construction inflation. We are expecting the rate of inflation on projects to continue, the rate to decrease, but we are still expecting inflation to be somewhere in the 1.4 to 2.8% per quarter for next year. So really we can use this to start laying out a particular project's buyout timeline. When's the best time for us to buy out certain portions of the project? What can be bought out early? All of that to kind of give our design teams the right direction for where to focus their efforts. I also wanted to touch just briefly on the supply chain and a couple of things that are still affecting construction schedules. We are continuing to see improvements in the supply chain, and thank goodness. That's what keeps us up at night. And that should help a lot of our project timelines. It is mixed, though, on concrete and cement products. Last year, cement shortages spread to 43 states across the U.S., and that was not, North Texas was not excluded from that. There were a lot of projects that were put on concrete allocations, which just really challenges project schedules. So the AGC reported that no cement capacity has been added since 2009, which is pretty incredible across the U.S. Thankfully, we're hearing that there are some new plants coming online in early next year, so we're hoping that with that increase in production, that will help the supply issue. And then with prices continuing to go up, hopefully the second half of the year we'll see some relief on the concrete side for pricing. The second major issue that we've seen, and I could spend all day here up here talking about all the major issues, but we're going to highlight just a couple of them. The second one is really the electrical distribution equipment. So this has become such a major issue that electric sector representatives partnered with the AGC, and they sent a letter to Congress about it. It's really, it's becoming an issue that can also affect the electrical system overall. The production of electrical equipment is not meeting demand, and demand is continuing to increase. So really, that's caused a major timeline issue on electrical equipment. They're reporting that between 2020 and 2022, those lead times have increased 443%. So something that you could get in 3 months, which was, still a fairly significant lead time, is now a year plus. I mean, we're seeing transformers, electrical gear depending on what it is, but in the 6-month to 2-year range. So very wide range, and really, moral of the story there is, if your project needs power, you need to start planning for it now. Step 1. All right, so should we all just pack up and leave town? I don't think so. DFW is still the right place to be, and we're seeing that for a lot of reasons. So the ULI PricewaterhouseCoopers emerging trends actually moved Texas up from, they were number 4 last year for overall real estate prospects. We're up to number 2 this year, which is fantastic to see. We're also ranked very high for local market investor demand and then development or redevelopment opportunities. And I'm sure you'll hear that from the other speakers too. So that's really encouraging to see that if you want to be anywhere in the U.S., this is the right place to be. That's also supported by population data. So you can see that, Texas, that's really hard to read, but Texas is at a 1.1% projected growth rate, which is higher than the majority of the U.S. And Ben kind of touched on that too. And zooming into our region specifically, we're projecting a 1.39% growth rate, which is this is for Tarrant County specifically, that's about 30,000 people next year. So the growth is still there, the people are still coming. We're gonna continue to need to build things for the population growth that we'll see here. So what do we do? What's the strategy for next year? And we are optimistic, but that doesn't mean that we're entering projects not aware of all of the risk factors. So engaging your partners early, really finding those strategic partners, building those relationships is going to be really important for this next year. Everyone wants to enter the project with their eyes wide open, so that means we need to be open about what we're seeing, what our concerns are, and work together to really solve those problems as early as possible. Internally, we've been seeing a lot of, a big increase in design build RFPs that have come through our doors. We've also been sharing a lot of historical project comps for before we even start looking at a project, where should it hit in the market? Where should we be? We've been studying projects with numerical cost models, so before we even start drawing, let's just talk about the project overall and run some numbers on it to see where it could be hitting with today's market prices before we start engaging some design. And really, I talked about this early, but those early procurement strategies, really setting up that timeline for the project at the very beginning is going to be really important for every project. So true collaboration, trust between the parties is going to be really important next year in order to find those solutions to all of these complex problems. So we're really excited and looking forward to being able to do that. I did want to share, if you want to pull out your phone, we do have a biannual cost report. It's a nationwide cost report in all the markets that we're at, and it really looks at several different market sectors in each geographical market. So feel free to take a look at that and kind of read more about what we're seeing across the nation.